alerts just went off about half an hour ago that ETH is down around 2,000, which I believe is a great buy price. I'm not a huge ETH bull, but $2,000 is a great psychological number, and it's bounced right out of that range. And again, our buy blocks showing there's a lot of buyers down in that 2,000 range. So if you can set your buy limit orders at 2,000 all the way down to like 1975, the midpoint, great place to pick up some ETH and see what happens here. So those are the big wild cards: the strategic reserves and the Solana ETF versus the unlocks. So let's see. First key to watch February. This is that CME gap that we saw filled, and we talked about that last week. Yeah, honestly, wait till the end of the week. A lot of macro data and events in the summit, so that's why people and big traders are selling ahead of this uncertainty. But as I was saying, FTX and Alameda wallets unstake 430 million for $431 million in Sol to be exact. And so making that basically that could hit the markets and further suppress Solana. I think it's been priced in for the most part. You know, we have seen Sol getting beaten down quite a bit, and I've been buying. I've been buying right inside of our buy blocks. So I'll go into that a bit. Right down here, and we were telling M3 members, set your limit buy orders at $125 range. And look at this, we missed it by just a hair. This is a sign of strength that they got right down to 125.76. Some of our members got filled at 126 and 129 and bounced into profit. And I've started buying in the $140 range, and we'll be looking to buy more in this strong DCA buy zone. This is again where the buyers are hanging out and hiding. All right, so we'll come back to that. And where were we? One more news article, so let's get to that. So let's see, especially long-term, such a move, Bitcoin. This is a bit of outdated data from the weekend. So let's just, I'm looking for more. March 7th again is Friday. Let's see, and queried how many good news stories, how many more good news stories could emerge from the new administration. And so this is true. The question becomes, what's the next big catalyst for crypto that could drive money back in these markets and back up to take out the new highs? And it's saying what would be the biggest sentiment change in crypto history. So they're saying all the campaign promises are priced in. And so people are wondering. I thought they were going to reveal what the next catalyst could be, but we just don't know. And jobless claims, here's the thing, jobless claims comes out on Thursday, and they're not going to be good. Why? Because they've been laying off lots of jobs for potentially the greater good, because our deficit is unsustainable, around $2 trillion negative. So they're trying to cut out the, allegedly, and not to get into politics, but allegedly cut out a lot of the wasteful spending and really kind of get on budget. So, and the day after, we'll proceed a speech from Jerome Powell. I guess he speaks Friday. Would that be correct? It's hard to keep track of all these, and I'll pull up the calendar here in a moment. So, as I said, inflation remains a talking point. And let's see, we have a pleasing result from the preferred inflation gains. Guys, you can't go by that. We talk about trueflation, and I'll pull it up tomorrow and essentially kind of see. But here's the deal. They're not going to drop interest rates. 93% would keep things right where they are. And so, that would be a huge catalyst if they dropped interest rates, but not looking likely at this point. All right, there's a bunch of things here we don't really need to get into. So still fearful. Yeah, the fear and greed is still around 24. It did dip down to 10 2 days ago, and that's generally when fear and greed gets down to 10-ish or below, we get a nice market rally. It just wasn't sustainable. All right, the Bitcoin's dropped to 84K. They keep talking about 84K on this, and that's a 1-hour chart, I say. So that would be a large gap. Let's see, the CME futures record price gap on looks like a 1-hour chart. I'll pull it up on the daily. And then this was March 4th today. And we had previously the CME gap was around 78K. and I proposed we'd go and fill that. We got within a hair's shade of it, and then markets rallied back up. And so, CME gaps, if you're not familiar, they tend to fill, as do the IBIT gaps, which we discovered, and I'll get to that next. So let me just finish off the news here. I think that's about all I want to get into. Don't want to go down the rabbit hole with liquidations and everything else. There's a never-ending amount of news out there, so let's skip ahead, shall we? All right, talking about the IBIT here, this is something that we've been tracking in the M3 Active Trader all the way since its inception, rather, since BlackRock first launched, all the way back here, all the way back last year, February of 2024. And this is a 4-hour chart. So with this cup and handle breakout, I was suggesting this is a good sign for Bitcoin, which it was. And watching this all the way through, ignore all the trend lines and spaghetti in there if you'd like. But noticing these gaps, the gap is from price action when, since the IBIT is a Wall Street product, trades on the CME as well. After hours, like after hours or on a Friday over the weekend, it's not tradable. And so if price moves significantly after hours or over the weekend and then reopens higher, you have these gaps. And so what's interesting is I started noticing these would fill. We had a gap, price came down, and then created a new gap. This had a gap, price came down, filling these. And, so I won't go into why they fill, and some of it's speculative, but the point is all of these were filling up until, and then we see this gap here took 6 months to fill. Price came down to fill the gap there, and in the process making some new ones. But basically, a gap fill means where there's a gap in the price, it acts as a magnet for price to come up and refill that gap. And it's just kind of a way of completing unrealized losses on the CME so they can get back to no losses. They can carry it forward like banks, unrealized losses, except for them, they can say, oh, well, we can close these trades out at even now. We didn't lose money on this drop because price came back up so they could close it. Anyway, point is, up until right when I said, guys, these gaps, 100% of these have filled. And then, of course, this one didn't. Although, yeah, we really hope we don't get that far down low. So the ones in red haven't filled. And, but I think, imagine some of these might have, let me just zoom all the way out and go to yeah. So actually, this on the IBIT is the equivalent of the 78K kind of area. So we did not fill this gap still. So the question is, do we go lower and start filling these IBIT gaps? And you can see I have this on there. If we were to close, it would be pretty quick, and then we'd rally out of it, I believe. So I'll set an alert though, crossing down on that 43.85 level, and I'll just say buy dip, because I do believe these will be bought up quickly. So right down here, if we do get that IBIT dumping, then this gap would fill. These smaller ones don't need to fill. They don't all have to fill. But the bigger ones generally do. Still sell pressure up above on the IBIT, which coincides with the price of Bitcoin. And so we'll have to keep an eye on that and see what happens, right? So this trade channel now, I guess we'll have to widen. I think it's really been broken, this trend channel, but I'll leave it on there. At any rate, let's move on. That's the deal with the gaps, and we'll keep an eye on that. Nothing discernible at this moment. All right. So coming back here, I mentioned we would look at. I think we've kind of covered the gaps. So I don't want to talk about CME gaps here. Let's look at the total market cap. The concern here is down below $3 trillion, and we pushed up here, got above it briefly over the weekend. Why is $3 trillion so important? Well, the top of the last market cycle was exactly $3 trillion. And it wasn't the price of Bitcoin, it was the price of total market cap when the programmatic selling kicked in, and that was the end of the bull market. Okay, so that's why these big round numbers are important. And so, we will probably struggle at $4 trillion as well. Right now, what we're looking at, though, that 200 simple moving average is sort of teetering on not holding. And so typically Bitcoin and total market cap are doing the same thing. This is showing some weakness here, so we want to keep that in mind and make sure we don't start heading lower. However, if we look at the total market cap minus Bitcoin, this is also looking fairly bearish, although still holding this important trend line. If I go to a weekly, we can see it a little bit better. And really need this to hold. I don't like to redraw these things, but we have support here. Now, this is the total market cap excluding Bitcoin. I'll clean up some of these lines we don't need to watch, but we have a couple of things to keep on our radar here, right? So total market cap excluding Bitcoin. Now this pushed right up, also interesting, isn't it? Pushed right up to the high in 2021, and now that was at 1.67 trillion. But at any rate, that is acting as resistance. We pushed up to retest it. Now here's the thing, and you guys in M3 know this. Typically breakouts happen on the third or the fifth attempt. So the next attempt at this should be the breakout. And therefore, what do we want to do? We want to set an alert here, breaking up higher on above 1.7 trillion, because then we would have a breakout on the total two, say breakout, and I would even say buy. Okay, I'm willing to gamble on that outcome with a stop loss. We'll have some resistance in this area, but the breakout, typically what it'll do is sort of kind of reject here, come back, regroup, break out, retest, and then really take off. So for these reasons, my timeline is a little bit longer than this. Puts us into summer, although this is a bit wide. I think we could see breakouts here into June, July. I don't know. Maybe I'm wrong, and maybe summer is the breakout, and we're having this correction, coming in early, and then we really rally June, July, August, September, and peak in October-ish. It remains to be seen. Let's take a look at our indicators here. So this is the Crypto Mastery class. These are the Crypto Mastery indicators. So our secret weapon in these markets have been on these. The arrows are our early reversal indicator, hence the name. That was an accidental discovery. We'll talk about that. They've been highly effective on calling market tops and bottoms, including the actual market top in 2021. Look at that, exactly there. Our trend strength indicator turned red and below 80 right there. When these coincide and start to coincide are when you want to be paying attention. I will also pull up our trade success checklist, which you can get for free at moonstream.io free checklist. And so you can download that. I'll show you, or just get access to it right away. So you don't have to opt in or anything, because if you're here, you are already on our email list. And that link, again, I'll just put it in the chat. Make sure you're using this. And there's some tools in there that even if you don't have our indicators, you can still get your hands on. Okay. Let's see, it's not showing up. Here's the chat. It's I have to put the HTTPS in there for that to show up. Okay, moonstream.io/free checklist. Okay, there you go. And that's where you can download this. All right, so what you'd want to do here then, and I'll just pull this out of the screen so we can hop back and forth. And essentially, when you start to see things like the early reversal indicator, that green arrow, and by the way, there's a lot of math and quant work behind that. That is a huge discovery. Just because it's an arrow doesn't mean it's not powerful. Just trust me there. But that's the first step. Do you see an indicator there? By the way, you'll need to download this to get the interactive version. Okay, so here where you will download it and then open that up as a PDF. Okay, so now I'll close this and this. Now we see this interactive. See that? All right, so when you check that off, you'll get a score down below. The trend or the trading success score is now 1. Now, is 1 enough to go take the trade? No, it's not. Yeah, you want to see at least a 2 or a 3. And we'll look at some live examples here in a minute. And you can see there are other patterns here, like the EMAs and some of the other things we'll get to. But more importantly, if you're not trading these markets, here's your cheat code. I promise you, this will